This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit better this morning. Much of this strength linked to ideas that the Fed, even though they are tapering its quantitative easing program, that there is still plenty of accommodation left in the banking system, which is supportive to stock indices. Also, we did get news that China is announcing new measures to stimulate their economy in the form of increased railway spending along with tax cuts. So from here I would expect further gains in stock index futures. Again, we are overperforming the news. We did have a couple of reports today that did come in on the weak side, and yet futures performing very well. Over in the currencies, we had the European Central Bank maintaining current interest rate policies, keeping their base lending rate or their key interest rate unchanged at a record low 25 basis points. However, we feel that in light of inflation in the Eurozone increasing at a slower rate, that later this year there's a very good chance that the ECB will add more accommodation to the banking system. A little pressure in the pound. We did have a weaker than expected economic report in the UK. Some selling in the yen. We have now the new tax increase that started April 1st, so it is widely expected that Japan's economy will be slowing. This should result in the Bank of Japan announcing more accommodation over the next couple of months, and of course that would be bearish the yen from an interest rate differential point of view. Also some gains in the dollar index, but we are right now in the middle of a major resistance area, which I think will hold. Longer term, the dollar index is likely to work lower. And in the interest rate markets, we had several economic reports today, as we mentioned, that coming in a bit weaker than anticipated, that being supportive to treasuries. Also, we are now in a 10-week broadly based congestion pattern in the 30-year bond. The rule of thumb is that when we do see a congestion pattern, that futures break out normally in the same direction that they came into the pattern. So that would suggest ultimately that we will break out to the upside in treasuries. Also, we do believe that the long end of the curve should gain on the short end. So look for the best gains in the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.